Silver isn't just the new gold. Silver is better than gold. This is making silver undervalued right now. It is that spring being compressed. Now you add the short position to that and everything else that we've been talking about here, we are set up for an explosion. Hi, Alan Hibbert is back with me once again, and he has put together one of the best presentations on the potential price that silver could reach, the explosion that could happen in the very near future, actually. Alan, how are you doing?
I'm great, Mike. Thank you. Yeah. Yes, the prospects for silver are even brighter than those for gold. Silver has been suppressed pretty dramatically, as we're going to see throughout this video, and we are seeing a short squeeze emerge in the United States and globally. So the potential here is absolutely huge, and I want to share some stuff with you and with our audience.
Excellent.
So first of all, silver as a hedge against market chaos. This is kind of interesting because normally we think of gold as a hedge against market chaos, and silver is something a little bit different. So how does this headline land with you?
Well, normally gold is a hedge against any kind of uncertainty, geopolitical, markets, pretty much everything. But this one is very interesting because I've never seen silver in this light. Silver is usually referred to as either the poor man's gold, or it's referred to as something that has bigger potential gains, but has so much volatility that you have to have a stomach of stainless steel, not cast iron, stainless steel, titanium, to be able to ride the silver roller coaster, because the ups and downs, whatever gold does, silver does times 3. This is an interesting article because people are now looking at silver as not just this sort of leveraged play on gold or the potential upside, but also as this real safe haven. And I like to see this. So let's zoom up on this a little. And I want to, so stocks have never, this is the thing about the markets right now. Stocks have never been so overvalued. And that is true. We are currently in the biggest bubble in history. Right now, it's much bigger than the tech bubble in 1999. With stocks trading at nosebleed valuations, almost anything could catalyze a crash. Well, I've referred to, everybody talks about the everything bubble, which is something I sort of, there were a few people, I may have been one of the first to dub this the everything bubble. But then I quickly changed when I was writing my book to, well, it isn't the everything bubble. It's the almost everything bubble, because gold and silver are not in a bubble when you measure them against all the other real stuff in society.
Exactly. And they are going to absorb all the capital from all those other asset classes when they inevitably crash.
Yeah, we're in that capital rotation.
Exactly. Exactly. And I've got an article here from The Economist titled "Why Silver is the New Gold," which is kind of an eye-catching title. Makes your ears perk up.
Oh, and it also says safe haven. Go back to that one.
Yeah,
safe haven demand.
Exactly.
Right.
And
right.
solar panels. Interesting. So
it's being seen in a new light.
Exactly. Yeah. So a combination of the monetary aspect, the safe haven demand, and the industrial aspect, solar panel demand. Interesting. But not everyone thinks silver is the new gold. They think it's different, or they think it's even better. Like James Anderson here, who says silver is not gold. He's commenting on this exact article. It has near no lenders, almost no lenders. Thus, pilfering unsecured ETFs will be push-shoved. Silver requires much higher spot prices before larger recycling gets going. Interesting. Catchy titles were used in the last bull run, 2010, 2011. Your thoughts on this, Mike? Is silver gold, or is it not gold?
First, I want to comment on the last comment from James, and that is exactly true. Catchy article titles were also used in 2010, 2011. I spoke with David Morgan. Hi, Dave. At a conference in Singapore back in 2010. And we were both wearing hats that said silver is the new gold back in 2010. So this is not new. I'm sure The Economist thinks they've come up with something catchy here. But there are no lenders. The lenders of last resort. When it comes to gold's price getting away, the world's central banks have a lot of gold that they're sitting on, and then they can lease it into the markets, and the bullion banks can then manipulate the price with all of the leased gold, because it's sort of phantom gold coming onto the market. Silver That doesn't exist. The stockpiles are all gone. So, and then with the silver requires much higher spot prices before large recycling gets going. Yes, you have to put all of the machinery and everything into place. That's years worth of investment. There is going to be something called the big melt. It happened in 1979, 1980, where all of the scrap, but so much of the scrap and old artwork and jewelry and everything was brought in and melted down way back then, that a lot of that doesn't exist anymore, old silverware and things like that. This time around, it requires higher spot prices, but I'll tell you, what happens during a big melt when everybody rushes to see, you see those people during a gold spike back in 2011, all these businesses sprang up, we buy gold, and people standing on the street with flipping signs around their head and stuff, we buy gold. And it became really popular for a little while. But during a big melt, the spreads, they're sitting on so much inventory that it's going to take years for your scrap to actually get melted down, refined, and poured into a bar. And so the people sitting on that, what you can actually get as far as a percentage of the spot price during that rush when everybody wants to turn in all of their scrap, you can't get anything for it. You get maybe 30% of spot or something like that, because all of the people that are buying it, they're going to have to carry a futures contracts that are rolled over for years before that silver gets melted down, and there's a carry cost. So let's move on. I'm sorry I went off on that, but the big thing is there's no lender of last resort to control these price fluctuations. When silver gets out of control, it'll do a moonshot.
Exactly. They try to manipulate it with fictitious silver, but ain't no substitute for the real thing. Speaking of, the White House urges the sale of stockpiled U.S. silver. And was that this week? No, that was back in 1981. Yeah. 1981. So, Mike, you wrote about this in your first book, right? The silver stockpile and getting rid of it?
Yes, and there's data in the first, and it's gone. They did this. The White House urged it. They did it. It's gone, so they can't manipulate it. But, for anybody that's interested, I'm going to be doing some stuff on this. You might want to subscribe to the channel. But the Hunt brothers were actually, they had a very outsized, large position. And silver is such a small market compared to gold. Gold was going into a runaway. And the gold market is huge compared to silver. But the Hunt brothers were actually used to cap the price of gold. They were the scapegoats. That's what when they broke the Hunt brothers, the traders that were trading gold, they're on the same exchange floor and they're going, wow, if they can do that to silver, we're next. Because it was all of the rule changes that broke the Hunt brothers. It wasn't, the Hunt brothers were actually on the right side of the trade. If the COMEX and the government didn't make the rules, enforce the rules, and change the rules at any whim they want.
Exactly. It's that centralization.
Yeah.
And they can do it again. All right. Silver squeeze on steroids for round 2. Look at this chart shooting up like a rocket. This is the short volume on one of the silver ETFs. And you can see that in the last few weeks, it is absolutely exploding.
Right.
This is a silver squeeze. I mean, this is okay. Almost off the charts. Good thing they adjusted the scale.
Yeah, so I just need to explain this once again to everybody. So what happens here when you sell short, your broker goes into somebody's account that has a margin-enabled trading account where they've agreed that the broker can borrow their shares without telling them. So they borrow their shares. You think that if you went long silver in an ETF, you think you own ounces that back that ETF. And the broker goes in and borrows them, loans them to somebody else that sells it to another long. Now 2 people own that same ounce of silver. And so what happens is, and I'm going to be doing a video on this as well, because there's a fascinating one about a railroad. There was 2 very, very powerful groups of people trying to acquire the same railroad. And it caused the entire stock market to crash as one stock shot for the moon. The whole rest of the market crashed so that everybody could get liquid. Well, here we have a potential short squeeze of epic proportions. This increase is all people that are betting that silver will go down. But if it continues going up, they have greater and greater and greater losses. And like I've been saying for many, many years now, silver is destined for triple digits. And as the price goes up, some of these people capitulate. They give in. They go, okay, I can't take any more losses. They close their position at a huge loss. But when they close their position, they have to buy the silver back in the open market. And that causes the price to rise. And when the price rises, the other people that are short then get squeezed even more. So they're hurting even more. And then when one of them capitulates, and as those shorts are covering their positions and it causes the price to rise, all the people that chase momentum start jumping in. And that's how the price shoots for the moon. We are potentially on the verge of this enormous breakout.
Yeah, it's incredible. Look at this. Whew.
Yeah.
All right, let's move along here. Robert Gottlieb. By the way, he's a precious metals industry expert, but he used to be an executive at J.P. Morgan, so he knows what he's talking about. He says silver is now in major dislocation territory with no resolution in sight.
He was an executive at J.P. Morgan's bullion bank, making him a precious. When it says precious metals industry expert, that is true. So major dislocation territory, and it is. Everything is very, very out of whack, and I'm sure the exchanges are in panic mode right now.
And he says here the implied lease rate for 1 week is over 10%. 10% for a week. I mean, that's astronomical.
Wow.
Yeah, so things are going to get interesting in the coming days.
Yep.
Things are going to get explosive. And by the way, silver inventories are leaking from London to New York. This is just like what we've seen with gold. Interesting. So maybe silver is the new gold, but maybe it's not. But anyways, you can see here that inventories in London have been dropping last few months, heading into 2025 and continuing. And then in New York, obviously they're filling up here. So we see this silver moving from London to New York. Yeah.
Yeah. I just want to point out for all of the viewers, there is a chapter in The Great Gold and Silver Rush of the 21st Century that's free online. Chapter 3 teaches you what to look for in a chart. Alan and I spent a long time putting this together. But in this chart, one of the things that I see that it skews your perception visually. And I just want to point out that because that scale, yes, the scale on the bottom is so small, from 250 to 375, as compared to ounces that are measured 750 to 1200. So it makes that bit going out of London look small, and it makes what's going into the United States look large. Well, they're probably about the same size. It's just all the way that you read the chart. It is silver flowing from London to New York, and it's very obvious if you know how to read the chart. There's not a bunch of magical silver coming out of nowhere to add to that black line of the New York, the COMEX inventory.
Yeah.
It's that London inventory that is making that black line. It's just the scales that make it look bigger.
Yeah, and even the amount flowing out of London is larger than the amount flowing into New York. So it's dropping, depending where you measure it from, but it's down about 100 million. If you 850 to 750, down about 100, but up only about 75. 300 to 375. So some people are taking physical possession, obviously. So, but yeah, we are seeing pretty significant flows. That's kind of the main takeaway here.
Okay.
However, this is just the overall inventories, but what about the ones that are available for trading? Well, countdown to the silver squeeze you can buy into. As a tidal wave of metal makes its way into the US, as we just showed, the LBMA's free-floating silver inventories have now inadvertently drained by roughly 100 million year to date, and that's 33% of the free-floating silver year to date. That's a high percentage very quickly.
So, you did some research just before this, and we discovered that free floating is the same as the registered category at COMEX. It is so this is the silver that is available for sale. This is, if you're trying to buy some, it's just this silver. and a third of it has been depleted in 2.5 months. This is just amazing, and we are set up for an absolute explosion. This is the dislocation that was in that previous article. Things are getting set up to where the only resolution is price.
Yeah, exactly. And at this rate, it's only going to last about another 5 months until London runs out of silver. That's like unbelievable. So
Right. Wow.
we will see. We will see what happens.
Yep.
Why so many conspiracy theories in silver markets? I don't know. Maybe because silver daily price data is total clown world. So look at this chart here. You can see the blue line is exploding. Let me show you what they are. So the red line is the New York Silver Open. Okay, so that's the opening price of silver in New York. No big deal. However, the blue line is the New York Overnight Silver Index. Basically, what would happen to the price of silver outside of the New York market hours. So
Yeah. If it was
outside,
only traded when the COMEX was closed.
yeah, if it was only traded when the COMEX was closed, look at the price of silver. It would be absolutely shooting up. Almost no pullback after 2011, just sideways and then up to the moon. It would be at $382 per ounce right now.
Wow.
So
Triple digit silver.
exactly. So it
There you
kind of seems like
it's inevitable for years. So
kind of seems like there's price suppression happening in New York, and that could be why all the silver is mysteriously flowing from London to New York to keep the supply, feasible to maintain the price suppression.
So this is making silver undervalued right now. It is that spring being compressed. Now you add the short position to that and everything else that we've been talking about here, we are set up for an explosion. And that $380 silver is not a ridiculous price. People, when I say triple digit silver for years and years and years, I've been called a nut by a few people, mostly people sort of entrenched in the industry. But when you look at the fundamentals underlying silver, it is inevitable.
I agree with you, and I'm not the only one. Eric Sprott here, the one and only Eric Sprott, says silver is going to skyrocket. $250 to $500 silver is entirely possible. He said this within the past week. So 382 is like smack dab in the middle of that. Totally possible.
I watched that interview, and he does cite two other people that are saying like 300 and 500. And so it is more and more people are sort of jumping on this bandwagon of triple digit silver is going to happen. And I believe it absolutely is. And I've been saying it for a long time.
Yeah, the price suppression is going to unwind, and we're seeing that happen. The markets are breaking, and there's only one way price can go up quickly. So another thing I wanted to look at here is the gold silver ratio, just to see, because we make the case for gold quite frequently on this channel, and the case for silver, as you can see, is much more compelling. The gold silver ratio right now is hovering around 90, around 88. And, this chart only goes back to 1995. So it kind of looks like it's in a normal range, slightly elevated, but kind of looks normal. Maybe it would return to about 60. However, when we look at a long-term chart of the gold silver ratio, look at this. Look where we are. We're up here. I just updated this.
This is 300 and how many years?
Almost 350, maybe 340 years.
Okay. So 340 years. And you calculated the number of weeks that out of that 340 years that silver was above 90, basically an even greater bargain than it is today. You came out with what? 0.88% of the time silver has been this much of a bargain.
3 years out of 339 years. Mm-hmm.
Right. And Dan goes, wow. So that is 0.88% of the time for 16 generations. It just shows you that this is not just a once in a lifetime opportunity, but a once in 16 lifetimes opportunity. Silver isn't just the new gold. Silver is better than gold.
That's right. Get your hands on it.
Yeah. Thanks for watching. Thank you, Alan.
Thanks,
we'll see
Mike.
you next time.